Hello, good morning, and thank you for attending today's CARM Open Mic Session with us. I'm Maria, the Marketing Manager at GHY, and I will be moderating today's session alongside our CARM experts, Alan Dewar, our Executive Vice President, and Sarah Marcotte, our CARM and Special Projects Manager. We are honored to welcome our special guests from the Canada Border Services Agency, Abdi Boussanni, Manager of the Financial Security Management for Release Prior to Payment, and Omar Yonis, Senior Financial Advisor, both of whom will bring valuable insight into the upcoming release prior to payment requirement. Please note that for today's session, we will specifically focus only on CARM's release prior to payment, RPP, bond requirement, which is set to take effect on May 20th, 2025. Now, for some direction on how we'll manage the questions during the Q&A to keep things organized. First, we encourage you to ask your question live. Please use the raise hand feature by navigating to the top of the Teams window to the meeting controls area and select that little hand icon. We will call on people in order that the hands were raised. Once we call on you, please turn on your microphone to ask your question, then turn it off again when either we've completed answering your question or after you've asked your question and have nothing further to add. If you prefer not to speak live, that's okay. You can type your question into the Q&A section. We will alternate between live questions and those in the chat, making sure to address everyone in turn as best we can. As always, after the session concludes, we will be sending out links to access the recording of the session alongside with some links to helpful resources. So without further delay, I will hand it over to Sarah and Al to get us started.
Well, thanks, Maria. We are trying something new, and we're certainly grateful for our guests to be present. We will endeavor to keep the flavor of what this has always been. It's an open mic. It's about hearing from you and allowing us and CBSA to respond to your particular inquiries. We've got a preliminary cheat sheet to start with to get some flow of the questions and answers going based on past questions. But as we get even into the previous flavor we've done, we want to keep that open. The two gentlemen are specialists in regards to the financial security agreements and all things finances, and they're the people, and their teams are the people that are answering the questions that are coming to CBSA. But if things happen through this open mic session that delve into other questions, we'll capture those and report those or get back to you through the overall process. With that, I guess I'll turn it over to Sarah, and then maybe we can get into the questions unless there's something that you'd like to add. Sarah was kind enough to have noticed these gentlemen and others in a open session at a different arrangement and said, it's really great and enlightening when you have experts like them on the line with you. So why not see if we can't try this as well? So we're trying it in that fashion, and with that, I'll turn it over to you, Sarah.
Yeah, I think that was well said. I think that's most of it. Thank you so much for everybody to join, and a special thanks to both of you, Omar and Abdi. So with that, maybe let's just hop right into the Q&A. As I said, we kind of put together a couple of what we thought were the just, really repetitive questions that have come into my team.
For sure. All right, we'll jump into the first one here. So, will surtax be covered under our RPP bond?
First of all, thank you very much, Anna, Sarah, and Maria for organizing this. It's truly appreciated, and that helps a lot to, in the context of the effort that we mutually do to educate our members, partners, and to make this transition successful. Okay, so for the first question, will surtax be covered under RPP bond? Yes. So the surtax will be covered. That's the short answer. And just to explain the way that CARM is designed, the CARM basically looks at the total AR on the account. It doesn't look at specific transactions for RPP, of course, but it looks at the total AR. So when the surtax it's applied to certain cards, so that's going to be picked up in the total balance. That's CARM basically uses to monitor the financial security coverage. So CARM will have an automated monitoring system that on an ongoing basis, it compares the due balance on the accounts to the total coverage that has been posted. And if it happens that this balance is being increased because of the surtax, so and it happens also that that total balance represents 75% or more of the total coverage that's being posted to the account. So the client will start receiving nudges just to warn them, hey, you need either to post a payment or to increase your financial security. Meaning that if the account owner keeps paying on time, paying the total balance, there should be no issue because that utilization rate, which compares again the balance to the total coverage, will be always in compliance. Just in case if the account is not paid on time, again, so the clients will continue to receive nudges. Yeah, and that will be similarly to either if there is a surtax that is applied to the account or not. Yeah, I don't know if that answers the question.
Absolutely, yes. Thank you, Abdi. That's perfect. Okay, we can jump into the next one here. Will a larger bond be required in July due to surtax increasing the total value of duties and taxes?
All right. Maybe I'll take this one. It's basically a yes and no. A larger bond will be required in July. So what will happen is the way the CARM solution has been designed is that there will be a yearly review. And I'm assuming this is what it relates to, the yearly review that happens in July to recalculate the financial security requirement. To echo what my colleague Abdi said earlier, that yes, the surtax will be covered under the RPP bond. So in effect, that will increase the total financial security requirement that is required by the clients if they incurred a lot of surtax during the year. However, the yearly review does get calculated in July, and it will take into account the July of the previous year to this July. However, when the calculation or the new amount is presented to you in the CARM client portal, you are given up until October 25th to comply with the new financial security requirement. Therefore, the reason why I said yes and no is yes, you might be receiving a larger number of a requirement than you currently have. However, you're not really required to meet that requirement as of July. You have until October of this year to comply with the new calculation.
Wonderful. Thank you.
Thank you.
Okay, we'll move into the third question here. What happens if we have a bond posted, but the value is less than what CBSA has advised is required?
Let me take this one, Omar. Okay, so again, generally speaking, the CCPs, account owners, they are expected to post a security that meets the requirement that is calculated by the CARM, by the CBSA, basically. However, for other strategic considerations to make the transition period more successful, smoother, so that decision remains at the discretion of the CBSA. If there are accounts that they have posted a security, they are undersecured, which ones that they could remain and which ones that probably present more risk that they should be removed. There should be more information with respect to that after, but again, the expectation is really to meet the requirements. So just in case there are accounts that are not going to be removed from RPP automatically on May 21st, 3 o'clock in the morning, it doesn't mean that there will be no consequences if we don't come back to the compliance. So again, the automated monitoring system that I talked about will run, and then we'll send nudges to the clients in case their due balance is over their coverage. And if the client is resistant to compliance, so maybe that they could be a certain time be removed from RPP. So it's best, again, if it's possible to post the financial security that is meeting the requirement that's been calculated by CBSA, and it's indicated in your portal there. Yeah, just to avoid any surprises later on.
Good, thank you.
So
Very
I just want
informative.
to recap that one, make sure we're all in agreement. So if I understand from what you're saying is that if an importer has a bond, but it does not meet CBSA's requirement, they wouldn't immediately be removed from release prior to payment, but they would still hold the same expectations as anyone else, where they must ensure that they're not going over that. They're going to start receiving notifications at 75%, but they'd also receive notifications for the fact that they're not meeting their requirement, correct?
Yeah, first of all, sorry, just to clarify. So I said that there is discretion there at the CBSA level to say if those accounts are to be removed automatically at the end of the transition period or not. But in case there are accounts that they will remain, you are right. So the monitoring, automatic monitoring system will send them nudges to ask them to increase the security in case their due balance is over the limits, is over the coverage that they have already provided. In case, let's say, for instance, that you say, okay, I went to my account and I see that this requirement really doesn't represent it shouldn't be my requirement, because in very exceptional circumstances, what CARM did basically is just picked up the highest month, but that highest month is very exceptional because there was a reassessment that happened only that month, or there is penalty that happened only that month. But if you look at my other months, the balance was very low. So yeah, we may take that into consideration. So you can just, through CARM, you go to the portal and you can make a request to reduce your financial security. We may take that into consideration. But if that is the level that is supposed normally to be posted as financial security, I would urge everyone just to go ahead and post financial security as soon as possible to meet that requirement. Yeah, just to avoid, all those nudges, monitoring, and the possibility of being removed or suspended or revoked from RPP later on.
Yeah, so it's very important for importers to understand that if for some reason they are not meeting their bond requirement, if they feel that's for a particular reason, to go into the CARM portal in financial information, financial security. And as we can see, Al has not posted the right amount of security, so he doesn't have the correct amount. And in here, he can click on this edit and request a reduction and provide the amount that he believes his bond amount should be. And then a case will be started with CBSA to review and advise whether that would be, I guess, work with you and find out, right, what you've made a decision on.
Exactly. I would just advise here, if you are doing this request, as you have just explained, Sarah, please continue watching out your notifications, because the only way that we can communicate with you is across or via CARM. So yeah, when you look at your notifications list, probably that you might receive a notification from CBSA asking you for more information or asking you for evidence to support your request. You know, sometimes probably it's not required if it's very evident in just by your explanation that you have provided. It's very obvious, but in a lot of cases, we would require more evidence, more supporting information or documentation to why you want to reduce. So yeah, it's not like the idea is not right just to take a chance, you know. There should be a good reason to why you want to reduce your financial security. Keep in mind that if you are posting financial security in the format of a security agreement, like a bond or letter of credit, you are required only to post 50% of the requirement that the system calculated for you, with a minimum of $5,000. So in the particular example of Alan, I wouldn't recommend a security agreement. I would probably, because of the low requirements, probably a deposit could be a better solution. So Alan can just go ahead and post a 235 to increase the security coverage to 245. Okay, and that deposit will remain there. And in case Alan next year doesn't want to import or doesn't foresee that there is an activity for a certain period, he could retrieve his money back, and he's not going to lose any dollar of those. So he could take them off, and once he thinks that like the year after or so, there will be need for RPP, and he needs to post a security, so then he can make another deposit.
So Abdi, I have a question, if I may. So how quickly, and so our general understanding, and you've explained well from a financial security standpoint, it's cash, as you see what I've done here, because I'm a small importer, or potentially a bond for somebody that's a larger importer, because it makes more sense and it's beneficial, as you've related to only have to post 50% or the equivalent of 50% coverage. It's our understanding that about half of Canadian importers, this is like 200,000 importers, about half of them only really need to post about $1,000. So they probably would, as you allude to, be more beneficial to even consider posting cash versus a bond, an example like that. How fast, and we've done we think a very good job in communicating with our clients to get a bond or post cash, just get the financial security agreement in place. But us and many others, there's still importers that haven't done what they have to do prior to May 20th. When shipments do hit the border, and let's say I was one of them here, you see me, and let's say if I didn't have something here, how quick would security be able to be posted? Because as a broker, I can't post here for the importer in order to process a transaction. Only an importer can process or post security in this way. How quickly is that recognized by CBSA if an importer goes in order for a broker to post the transaction if a shipment is coming in or is pending?
In terms of deposits, I will let Omar probably explain more, but in terms of deposits, if we are talking cash deposits, it's instant, and the TCP basically has the full control. So because you need just to go to your portal and complete the transaction, making the request to create a security deposit, and which will prompt you to make the payment, and it's done. So you have security, you have the RPP that's going to be automatically activated, and that flag will also go to our system across that the border service officer will be able to see on the system for releasing the goods. So it's almost instant, I would say. With the security agreement, that depends on a little bit on the security provider. because if you are posting the security in CARM first, then it goes to the security provider to validate. That timing that we do not control, nobody controls. So maybe a good communication with your security provider to tell them, hey, I have posted the security through the portal, and now you should be able to see it on your portal. Can you go ahead and approve it? So once they approve it, again, it's automated process. So it's going to be instant, and the system automatically validates the RPP for that account.
So would it be safe to say it's instant only if you post the amount that it's being requested? Like you see here in my example, if you scroll up, Sarah, and I just want to make a point. So in my example, I've only posted $10, which isn't necessarily good, based on what you're asking for. Let's say I'm a smaller importer that's a seasonal importer. I've got a shipment that's coming in that's $1,000. But yet if I look at from a seasonal standpoint, you have a total security requirement of 5,000. If I was an importer and tried to go in and post 1,000, that wouldn't be instantly recognized unless you do the total security coverage. Is that fair, or would you accept something?
So here the circumstances actually they are a little bit different. The reason is we have given RPP to all accounts during the transition period. However, if let's say, for instance, Alan is removed from RPP on May 20th or 21st because he's not compliant. So his security coverage is too low. Okay, and the CBSA makes that decision to say, well, Alan, come on, you don't you provide only $10. That's not significant. So get removed from RPP. What you need to do is you have to go back and enroll in RPP. At that time, the system will do the job as it's supposed normally to be, as it's being designed. So if you don't meet that 245, the system is not going to give you RPP. So you have to post a security deposit of 245 in cash, or if you want to go with the security agreement, so that is minimum of $5,000 that has to be posted before the system automatically validates RPP.
Well, thank you, Abdi. I didn't know that. Thank you very much. My assumption was if I had posted security and I had been still current, even though I was below, that maybe I'd still be okay. But if we don't, or if somebody hasn't done the right thing come May 20th, they're in jeopardy.
Yeah, it's going to be very dependent on whether, like we talked about in the last question, whether you have that release prior to payment active or not, right? If that is removed, when you go to enroll here, it stops you unless you have the adequate or higher than amount.
Okay. Thanks for that.
Okay,
yeah.
thanks.
Omar, is there anything that you'd like to add to this, or was this covered?
No, you've covered it all. You've covered it all as far as like cash. I think if you can, if Sarah, you can scroll down a little bit, just to where the ad bond area is. No,
sorry,
let me go back. We're not even there. Sorry. Yeah. I think I just wanted to highlight, like, in the financial security dashboard, see the ad bond. There's next to it, there's the make payment and then the allocate credit. Yes. The 3 buttons. Those should be your best friend if you're adding, like currently in the situation that we're in right now with the transition period, everybody has RPP. If you want to do, if you do want to add a cash bond, those 3 buttons are your best friend. The first one is to add the bond, the amount of security that you would like to post in cash, and then the second one is to make the payment, and then the third one is to allocate that payment to the security deposit document that you've created. Oftentimes, then what we're seeing right now with the team is that we're receiving a lot of clients saying, well, I made payment to my account because they wanted to meet the requirement of what, 2,500. So they went on the portal and they added $2,500 on their account as an amount credit, but they've never created the cash bond itself or that security deposit, which means that overnight the system will use that credit, because we don't know what this money is for really, to offset other debts on the account. So just make sure that your starting point is always adding that cash bond, then moving along with making a payment and allocating credits if you don't have credits on the account already. But if you do have credits on the account, obviously you can just add the bond and let the system do its magic.
Wonderful, very informative. Thank you, everyone. Okay, we have some questions that have come in, so I'm
Yep.
going to jump to those, and then we can potentially jump back into our FAQs. So I'm just going to share my screen here. The first one that came in is from Amanda, and she is curious to know if the CBSA will publish a process for how to apply one bond to multiple RM extensions for the same BN9.
I can cover this quickly. Now, as far as publishing a process, maybe I'll leave that for Abdi, but ultimately applying this like a bond to multiple RM accounts under the same BN9, that would have to be done through between the business and the surety provider. What you do is you go to get your bond. Let's say it's $1 million and you want to split it on 4 accounts, $250,000 each. What you would ultimately do, you outside of the CARM solution, you get your bond in order with the security provider. But when you come into the CCP account or your actual client account, what you're actually creating is 4 different non-cash bonds, one for each account, and submitting all 4 to your surety provider. And what would help you is by using the same bond number for all 4 to indicate that all these 4 are the one that you have in the back end with your security provider.
Wonderful. Thank you, Omar.
I see Amanda's hand up.
Yeah, I did take myself off mute. So that's perfect because we've been struggling to do this, but we haven't had that specific instruction granted to use the same bond number across all 3, and that's going to solve the problem for us. So maybe even just publishing that would be so helpful. Thank you.
Fair enough. Cool, no problem.
I definitely recommend that you reach out to the surety company because it's definitely up to them whether they're able to. I personally haven't spoken to a surety company that at this time is able to do that.
I would like probably just to add to that because I have been receiving questions on who has the access to do what. So just to clarify, for the account owner as the importer, the only time that you can do the process and allocate one bond to multiple RM accounts is the first time when you are posting a security. So you have already gone to your security provider, you obtained a security agreement from them outside of CARM. Then you have 2 options. It's either to post yourself the security, then it goes to the security provider for validation, or the security provider themselves, they can either through CARM or API connection, they can post the security for you, and CARM will validate automatically the security or RPP after the security provider have done their job. So again, the importer, the only time that they can allocate to multiple RMs is the first time when posting a security. So they take that security agreement that they obtained, and they use the same security number. And basically in CARM, they will create a new security for each RM number, but with using the same reference, the same bond number, let's say, that's being provided by the security provider. So they do that process for the first RM, the same process from the beginning, second RM, the third RM, etc. Now, if, let's say, for instance, after that is being validated by the security provider, all the allocation has been done, you could see the RPP for all your RM accounts, but then, after a few months, you say, oh, this allocation does not work for me anymore because I have more activity on one RM rather than the other one. The security provider can make those changes via API. So they can go to your accounts and they can make the changes to reallocate that bond according to the breakdown that you want them to do. But you don't have any access to change that amount. So you have to communicate with your security provider to do so.
Oh, Amanda, you have. There you
I'm
go.
so sorry. So then if one bond has already been posted, the only solution would be to cancel it and then re-enter it across the multiple RM numbers.
Amanda,
That's-
has it been posted? Sorry, has it been posted?
Yes,
Is it a new electronic bond?
yes.
What you can do is you can talk to your security provider, say this bond is, again, let me, I'm just for simplicity of accounting, I'm going to say this bond is $1 million, and you want to now use that 1 million to cover the other three accounts. You can talk to your security provider to lower the amount of the $1 million bond, or this bond that's currently on the system, to whatever allocation that you want that specific RM to have, and then create new electronic bonds for the other RMs that make up the difference for that $1 million, and send them to your security provider. And once they approve it, basically, you just made the split kind of thing.
Perfect. Thank you so much.
No worries. But they need to inherit the same data or tombstone information. The validity date of the bond should be the same from two, and the bond number should be the same. And obviously, you would have had that communication with your surety provider to say, hey, like, we're going to be sending you these requests, and they're just a split for that 1 million. So reduce the million by whatever amount, and then make up the difference in the new ones.
Thank
Wonderful.
you.
Thank
I
you for
think that
your-
was sorry. I think that was
No,
a great
that's good.
question, and I think that also clarifies a lot for some importers that have been asking. I will definitely go back to our surety company and see if maybe they can address it that way, because that's been a problem on their end as well. So same data, duplicate the security number. I assume you duplicate the CBSA ASEC number? No, that one you can't. I guess that's.
I mean, I'm not sure if they do see the ASEC number to begin with. Like,
Yeah,
I
I'm
don't
not
think
sure.
so.
Okay.
I think we're moving away from that.
Excellent.
Yeah, there is
Well,
no
thank you.
ASIC number now. Yeah.
Mhm.
Yeah.
Thank you. All right, we will jump to the next question it was from Sandra here. So I have an old invoice unpaid. It was an entry UPS did. I asked them to take care of it, but they say oldest gets paid first, which I understand. So why would it still keep showing as past due? And how do I take care of this since UPS refuses to handle it?
This is more a payment processing issue. So
Account management.
yeah.
Yeah.
So all what she can do is it's either like there are two options. So if you could go to your account through the portal and you could see clearly that this is the only invoice that has not been paid, and that was to show the balance. Like the balance, it represents exactly this old invoice. All what you need to do is just to go ahead and make a payment through CARM, debit credit, or you can even make a payment through other means, like banking, online banking, for instance, just to create a credit. And then you can go to your portal and allocate that credit to that specific invoice. Otherwise, the system should be able to do it for you. The other thing, also, if you are not certain of all those steps, you may just go to the web form, and just create a request. So make the payment first, and then create the request. So our account management team will look at that, and will give you the clear advice.
And just here on the screen, much like the RPP allocate credit, there's a spot here in your transaction history. So if you had available credit, it would show here. So if you made that payment, and when you click allocate credit, you can select that specific transaction that you're attempting to allocate that credit to.
Exactly. So once you click on that allocate credit widget, so that will drives you to a list of all open items. So all the transactions that they have not been offset or they have not been cleared, basically. and you have the credits that is available on your account. So you may select all the transactions that you want to offset first against that credit, and they will be cleared, basically.
Wonderful. Perfect. Thank you so much. Okay, we've got one last one here that's in the chat. I'm just going to share my screen. So this one comes in from Zoris. What period is used for RPP utilization calculation?
So
I think that's
this one.
Yeah, go ahead, Omar.
This one is a quote unquote real time calculation. However, there's a 1 day delay in it, basically. So the calculations we have certain scheduled jobs to look in the back end and look at the open items that you have on the account versus the financial security coverage that you have, and do that calculation and then display it for you. But it's not happening every 5 minutes. It's happening on a day to day. So you might have seen it today, paid it, and then tomorrow morning it will get updated. It's not going to be updated like the second you make a payment to reduce the financial security, to reduce your accounts payable. So I think that may answer your question. It says on the portal it's real time, but there is a delay based on when we have the job scheduled in the back end. Yeah.
Perfect. Thanks, Omar. Okay, we've got a few minutes left, so we'll just see if any more questions come in. In the meantime, we'll grab one more from the FAQ, which is number 4. What will happen if we do not have a bond in place because all goods and duty-free and GST are exempt, and we get a shipment that has duties and taxes assessed against it?
Yeah, honestly, this question is still under review because it's still under internal discussion here in the within the CBSA. So there is a decision still to come with respect to that. However, and that's going to be communicated. So the only thing that I would like to make a note of in here is the CARM design. Again, as I explained in the first question, is it doesn't look at specific transactions. It looks at the AR that they are posted to the account. So if a client, for instance, that has declarations or has transactions that they are exempted from paying dues and taxes, but has other transactions that they are not exempted, or has other items like penalties, for instance, interest, or all those, they are going to be picked up by the system, or have already been picked up by the system to calculate your requirement for financial security. So probably that's going to reduce your requirements because most of your transactions, they are exempted from paying dues and taxes. But if you still have other items on your accounts, there should be a requirement for you to post a security. So the best advice is to go to your portal and see what is the exact requirements that you have for your specific account, and you need to meet that requirement. But if, let's say, for instance, that your account has zero balance because all your transactions basically just are exempted from paying dues and taxes, and only what you have on your account, they are just those P3s with $0. There is a decision that's going to come up very shortly about that.
But I just wanted to kind of add. Sorry, I just wanted to add a little bit to this piece as well, because if you don't have a bond in place and your requirement is zero, you're on RPP and you're always releasing your goods at the port of entry without incurring any duties and taxes, and then this shipment comes in and you incur duties and taxes payable to or like you incur that debt, ultimately will get picked up in July for that really yearly review, right? So if you happen to incur the duties and taxes this year, let's say in last month or the month before, but before that you were at zero, and you incurred $2,000 for February 2025. In July 2025, we will take the July to July, and then February will be in that year calculation, and then therefore your financial security requirement will be updated to meet that $2,000 that you incurred in February. Ultimately, from a system perspective, if you incurred a debt on it, and that debt happens to be the highest debt over the period of the past 12 months, as of July, then it will get picked up as the new security requirement.
Wonderful. Perfect. Thank you so much. Okay, we are going
So
to.
I want to be respectful of Omar and Abdi's time, and we can carry these other questions there. These gentlemen are prepared to be at a different session, but there's one leftover question, and or there's a few questions, but one that we'd like to ensure is bridged. Certainly our audience is generally an audience that has been attending many open mic sessions, so they're well versed in CARM, but this question isn't entirely, or comment isn't entirely RPP related, but I think it is important to share. The person is saying, we've entrusted GHY to handle CARM requirements on our behalf to keep things business as usual. But what do we need to keep an eye on to make sure we remain compliant? And I think what's most important here is that CARM it's an importer program. It's how CBSA is connected direct to importers and created that pathway. I think you heard, I think it was Abdi that referred earlier to the fact that people who have access to the portal will get notified, and that portal is your friend to take a look at to see what monies are owed or what notifications are outstanding in order for you to control compliance and engage whomever your service provider is, whether it be a GHY or another party. Is that fair, Abdi or Omar, or would you punctuate that in any sort of different way? I know that's a little bit off RPP, but I think it's a comment that should be regularly revisited to people from a CARM standpoint if it's correctly stated.
Yeah. Thank you, Alan. That's a very good question. So I would remove GHY from the question and talking about brokers in general. So, excuse me. The CARM R3 has shifted the liability for paying duties and taxes to the importer. Just to make it very clear on that. I know that your broker is your best friend, very knowledgeable, they are trusted, everything. But when there is a collection process, for instance, that happens, so that goes against the importer owner, or whose DBN has been used to make the declaration or to do the accounting. So therefore, it's very, very recommended that we keep an eye. So even if I'm using my broker is very good, but still, I still have for my legal liability, I still need to make to keep an eye. Go to your portal. It's very easy to handle, very easy to like my understanding at least to navigate. And at least, yeah, I should watch for my notifications. I should watch for my utilization rate, because that's what's causing my notifications to be received. Maybe that there are communications from the CBSA that's coming directly to me. I have to see that. So it's very important to keep an eye as well, just to make sure that there are no surprises.
Absolutely. Well, we will close it off unless Sarah, Al, did you guys have anything else to add? You're good? Okay.
So Maria, like just to add to what
Sure.
Abdi just mentioned right now, just 1 minute. Like overall, as to echo what Abdi said, the responsibility does fall on the importer, and things to keep an eye on is, am I compliant with the financial security requirement that I have, like CBSA has calculated for me? Do I have that right financial security coverage? As Abdi said, also the utilization rate and the timely payments, because all these, from a financial perspective, those are the ones that may affect your status in RPP, and therefore your release at the port of entry. Sorry to take a little more time on that as
No,
well.
absolutely. No, it's your time. So we're very appreciative. So on that note, we will mark this as the conclusion of our session. We want to thank everyone for attending. And of course, a very special thank you to Abdi and Omar for joining us. So as a reminder, we will be sending out a follow-up email with a link to access the recording, links to resources, as well as registration to our next upcoming CARM session with, again, Abdi and Omar. So again, please reach out to us at any point. We're always here to help. Take care and goodbye.
Thank you.
Thank you,
Thank you
everybody.
for having
Thank you.
us.
Thank you.
Thanks for coming.